This is a story about the Otamatea Mountain Club and how much money they made out of their vending machines. So what we're going to do is we're going to do this part here, the trading account, and the idea of the trading account is to find the gross surplus. The gross surplus is the difference between what we bought the goods for, in this case it'll be the bottles, and what we sold the goods for. So the difference between what we bought them for and sold them for is basically a profit. In this case it's called the gross surplus. For Otamatea Mountain Club, the bottles are purchased for $1 and they're sold for $2. So for every one they sell, they make $1 gross surplus. We're going to start down on this part. I'm going to make that one there a heading. So we're going to calculate the cost of sales first. So the Otamatea Mountain Club started with 100 bottles. That's the bottles in the vending machine at the start of January. 100 bottles, we know that they're $1 each, so the value of the bottles at the start of the month is $100. During the month they purchased another 600 bottles, at $1 each, so they paid another $600. Notice that's underlined because we're going to do a formula. So during the month, if they sold none, they would have 100 they had at the start plus 600 they purchased. So we're going to type a formula equals that one plus that one. So they had 700 bottles available to sell at their mountain club in their vending machine. However, during the month they did sell some, and we weren't there to calculate how many they did sell, but we can find out by taking away less the inventory at the end. So according to the diagram, they had 200 left times $1, so it's worth $200. So what they had available minus what they had at the end tells us the value of the goods, or in this case bottles, that they sold. So $700 available minus 200 that we had left at the end in the vending machine. We're going to put the total over here because it's an important figure. Equals 700 minus 200. So for the 500 that we sold, it cost us $500. We know that we sold those 500 for $2 each. So we're going to go up to the sales here and we're going to type equals 500 times 2. So $1,000 worth of sales. 1,000 minus 500 equals 1,000 minus 500 means we made a gross surplus of $500. After that, the club will want to take off some of the other expenses. There might be freight costs, there might be costs for electricity for that vending machine, there might be all sorts of other costs like repairs for the vending machine, and that'll give us a net surplus or a surplus for the month for that vending machine, and we'll transfer that over into the income statement, just a one figure surplus. But at the moment we're just concentrating on the trading account section. Sales less cost of sales gives us our gross surplus.